All right. All right. We'll give everyone a minute to trickle in, and we're going to get this started right now. So, good afternoon to our friends here on the East Coast, and good morning to the rest of the country. We have a little hot take today. It's a more abbreviated, 30-minute session that we think is arguably the most actionable content we've put out. Not the sexiest of concepts, right? But I don't think we always need, to engineer installment sales with intentionally defective grantor trusts to sell big life insurance policies, right? We're kind of getting back to basics here and accessing the low-hanging fruit to help benefit your customer. Um, and arguably, some of the folks on the phone here, on the call here, have helped us monetize what seemed to be a service nuance into a very important vertical for us at Life Brokerage, and that is through policy service, policy owner service, and not just utilizing policy owner service in a defensive way, but going on offense. And what you're going to learn today from our esteemed colleagues here is that there is a huge opportunity in the term conversion marketplace. Um, I'm gonna before I make introductions, I'm just gonna kind of maybe set up the call a little bit. So, in recent years, we've seen a noticeable shift in how life insurance companies and their reinsurance partners are responding to term conversions. Um, the term adverse selection continues to plague insurance companies and their reinsurance partners, and the reinsurers bear a large share of the mortality risk, right? So typically, clients who are exercising their conversion privileges um, are doing it for a reason, and namely, they are older, they are not in the best of health conditions, and would not go out and qualify for the same rate that they did at inception of their term. So, what you're going to learn today is how the market is responding, in particular, a block of Lincoln business that our friend John Kimmel is on the line to explain, where Lincoln isn't alone. They tried with all good intentions to give this block all of the privileges that would benefit the consumer. But at this point in time, it's just not sustainable. So, we're going to hear from Adam DeMarco, who's going to give us a kind of a state of the union on the term conversion market. We're going to hear from John Kimmel to talk specifically about Lincoln and a particular block that if you weren't selling Lincoln term during this period of time, you were literally living under a rock. I mean, this block will affect 80,000 term policies. And then we're going to bring in our secret weapon, Rick Hyde, who has built an aggregation tool for policy owner service that you will get access to through Life Brokerage at no cost to help manage the complexity of this term shakeup or these term conversion shakeups that we're experiencing in the industry. And if you want to take it a step further, you can employ the use of our team, Kathy Esposito, Adam DeMarco, and our series of sales directors to help manage that book and bring you on a proactive basis, bring you opportunity, quite literally on a regular cadence. So without further ado, let's go around the horn real quick and just introduce each of our speakers here, and we'll move this in clockwise, at least on my screen. And Adam DeMarco. Adam, who are you? What do you do? And tell us just briefly a little bit about yourself.
Adam DeMarco, Life Brokerage, Anthony Mento's partner, and here to run the day-to-day operations that work with advisors in the company and the marketers here, and kind of oversee accounts management and dealing with the different carriers and selecting products and working on underwriting.
Thanks, Adam. One of the best product guys in the industry, knows the conversion market inside and out, and that there's no coincidence he's here with us today. Next, John Kimmel.
Thanks, AJ. Yeah, I'm John Kimmel. I've been with Lincoln 26 plus years. I've been in the financial industry Since 1985, I support agencies in Pennsylvania, New Jersey, Maryland, Delaware, DC, Florida, Indiana, and Ohio.
Thanks, John.
So happy to help in any way I can.
Thank you, John. Rick?
Yep. Thanks for having me, Anthony. So Rick Hyde, been in the insurance technology space for over 30 years, and everything we've ever built is around aggregating in-force data, bringing it together, trying to enable in-force policy service, which is the hot topic we're talking about today. So look forward to showing you guys a little bit today.
Yeah, amazing work, Rick. And I know you're not finished just yet. There's some more runway here. So let's kick it off. What agents must know now to protect client options? And Adam, we'll start with you. Just a couple of questions, and maybe I'll ask a couple at once, and you can kind of play this out how you like. What trends are we seeing across the industry, Adam, when it comes to term conversions, and why are insurers tightening conversion rules now?
Yeah, so up until around 2013, term conversion privilege, it's called term conversion privilege, was really a right of the contract. It was built into it, right? And when you look at a life insurance policy, it's a legal contract, right? It's a unilateral contract, means one party has to adhere to it, and that's the insurance company. You could drop them at any time, they can't drop you, right? So this business about adverse selection, if somebody is 50 years old and they're buying a term policy for $100 a month for 15 years, at 65 years old, if they're in good health, they're not going to pay $60,000 a year or whatever the conversion might be to do it. They're going to go out and get another policy. So the insurance companies know that, generally speaking, particularly at the end of term policies, unhealthy people tends to be a very unhealthy block of business. They're getting stuck with all the sick people in that block. So up until around 2013, it was basically a contractual right. Companies would say, look, if we offer these products, you could get underwritten for them. If you happen to have term insurance with us, you get them on a conversion. And Transamerica was the first company that I could remember. There may have been others that said, look, they had the best guarantee universal life in the market. Like, it was the best. If we were underwriting, that's who we want. And they said,
TransAce.
Yeah. And they said, look, if you get underwritten, you could have the best product in the market. But if you are doing a conversion, you have to get this product. And that product was priced. I had preferred plus clients that, I could beat at standard or table ratings. And there was we're in brokerage. We see the trends. Transamerica was the brokerage company at the time. We saw that agents said, I'm not selling them anymore. I'm not dealing with them. That lasted about 6 months, right? And I think other companies took notice and they said, well, we could start doing that too. So within the marketplace, there's a few different things that exist. One is they say you could get any of our products, but maybe the agent gets a commission reduction. Maybe the agent gets a spread commission. Maybe the agent doesn't get paid commission. That's it. Or they might say that's after a certain period of time. Then you have companies, Lincoln being one of them, that says, look, during a reasonable amount of time, 5, 10 years, whatever it might be, Lincoln 7, they say you could get any of our products if you get underwritten. But after that, we have to kick you into this other thing, because that's how they built and priced their term insurance, to do that. And then there's other policies that where they say, look, you can get full conversion right to anything. And it's usually a current business practice. So the companies that are doing it today, there's nothing to say that they won't take Lincoln's position or a harsher one tomorrow. And we've seen just about, we used to have a list, and these are your 3 trouble companies, all else being equal, maybe you want to sell a different company. Now it's like we have like a couple companies that don't do that. And there's nothing to say that they won't later. So what was once a commodity in term insurance, it turned into this kind of nuanced product that it basically has a few different facets to it. So it's unfortunate, but it is the way of the industry now. So you just have to be mindful of it as an advisor and getting your consumer into the best product. It actually, you could look at 5 different term policies and they might have all different types of benefits. You actually have to look at the features of them.
Adam, what's your recommended message to approach clients, especially those with good health?
So people with good health have to be mindful of a couple of things. One is that, and again, Lincoln did not do this, but some companies will show up on the spreadsheet with a convertible term, and they'll make that convertible term all years except for the last couple or something. You got to be careful about these things, because a lot of insurance is purchased now through aggregation and automated things where maybe the agent isn't involved as they were a few years ago. So what you want to look at is the policy convertible? Is there any restrictions on conversion? Those are the two things you want to look at. And I think if you do that, the far majority of policies are actually going to have something. And then you could go a step further and say, is there any provision in the contract that says that they can't prohibit conversions, that you could only convert guaranteed to anything that they offer? That's quite rare. But within the term space, it's not just limited to that. There's term conversion riders where you could guarantee yourself favorable products. There's extension of long-term care type provision riders. There's living benefits that exist on term. So the term space is getting a little more, it's broad what it's doing as well. But those are the things that I would look at. I would look to see if it's convertible. I mean, if I have a 20-year term, it's convertible for the first 18 years. To be honest, it's almost like not worth it's almost like not having a conversion right, because that's the only time I'm probably going to convert it anyway if I'm a term buyer. Because if not, I would have just bought permanent insurance as a part of my portfolio. So I think that 2 years is bigger than the first 18, in my opinion. But
without question, yeah. I'm going to kind of get a little bit ahead of myself. We're going to hear from Rick a little bit on this topic. We're also going to hear from John. Maybe two-part question, Adam. What role should technology and CRM systems play in managing this conversion risk going forward? And how does that relate to carrier notifications when it comes to having some of these complex rules on when the conversion expiration date expires, or when you can convert to the good stuff versus the bad stuff?
Yeah, so it's really on a company like ours or the agents to message this out. It's the consumer is not going to know the difference. I mean, maybe a really informed consumer might remember what the agent told them, or maybe you get a rare one that read the whole contract back to front and had some questions. But it's on us to deliver that message, right? And if I were an advisor working with like brokerage or going through my book of business, I would take a look at all these policies. There's going to be some clients where the conversion may not be relatively, it might be relatively unimportant. Maybe they just bought the policy. Maybe they're a young family. It's not of need. But with the change of the environment, if I was with a certain policy that just had terrible, terrible conversion rates and I was healthy and I could qualify, the beauty of this is that if you're 10 years into a 20-year term, it may be cheaper for you to go buy a new 10-year term, or it might be marginally more expensive to go buy a policy that has dynamically better contractual benefits, whether it's the living benefit riders or the term conversion privileges. So this is something for healthy clients. If you could get to them before it's a problem, you can make minor adjustments. And by the way, you can give people accelerated underwriting. They could get a policy within a couple of days, right? So you could fix it quickly. And it's a way for, from an advisor standpoint, it actually could be a good market for them to relook clients and just improve their term, because it's no longer a commodity. That's why. And it used to be, and it's still treated like that. When you hear commercials on TV for term life insurance, or you go on to one of these websites and the top 20 companies are 1% away from each other in pricing, it's hard to tell them apart, particularly when you have really good companies that you've heard of. You might go for one of those, and it's just not the same. And again, it's a contractual right inside the contract, and our job is to get you the best version of this contract. And a lot of that focus is always on price, but the best version of the contract in term insurance, just there's different definitions of that as far as I'm concerned now, which involves contractual benefits, conversion privileges. And I think it's something that definitely could relook your term and see if it's something that you can enhance. And we found clients to be receptive about it when you talk to them about it, because they want to have as many chips in their pocket as they want.
I'm going to shift gears a little bit. Just talk to John. John, can you walk us through Lincoln's new conversion limitations and what prompted the shift?
Yep, absolutely, Adam or Anthony. So on June 23rd of this year, Lincoln made an announcement to the field, as Anthony had said earlier, on a block of 80,000 policies issued between April 1st, 2007 and September 12th, 2016. And the announcement was that they're going to give them 1 year to convert into the full product portfolio. So from June 23rd, 25 to June 23rd, 26, 1 year to convert into our full product portfolio. After that 1 year, they can only convert into our conversion UL, which is priced at about a table D as in David. So if you are going to convert and you want any form of lengthy guarantees, you want to convert prior to the end of this 1 year period. And Anthony, I know what you're probably going to follow up with, but what's the urgency right now to convert? Well, the urgency is in that announcement that Lincoln sent out. We send out a monthly newsletter. It's called the Lincoln Life Leader. It states that you have this 1 year window to convert. But what it also says is any products Lincoln creates and brings to market during this 1 year time frame, you don't have access to convert to those products. It's only the products that were on the books when the announcement was made. That's the good news. You have 1 year for the full product portfolio. The bad news is we are bringing out new product during this 1 year time frame. And when we bring out new product, we replace the old product. Old product comes off the street. You don't have access to that anymore. New product comes on. You don't have access to that. So in particular, AJ, we have a product called the Wealth Preserve, which most of our term conversions convert into this product. It's an IUL, but it has a 40-year guarantee or age 90, whichever occurs first. That's our longest single life guaranteed product right now. That is slated to be replaced in December or January of this year. So if you want a longer guarantee, that is your product of choice. Once that's gone, your longest guarantee is a variable product called Asset Edge, up to 20 years, depending on your age, or our new Wealth Builder IUL that only has a 10-year guarantee. So the urgency for me is, and the important message, Anthony, is if you're going to do something, I wouldn't look at it as a 1 year window. I would look at it as a 6-month window if a client wants any type of guarantees.
That's interesting, John. Talk to us about, and this isn't a Lincoln issue, and we're not certainly picking on Lincoln. I mean, you're here providing an enormous value to us and our agent base. Why is Lincoln not, why are carriers not notifying clients, and how does that change the agent's role?
So very, very good question, Anthony. And that's why I'm glad you put this call together, because again, there's 80,000 policyholders. Lincoln is not sending notices out to these policyholders with this change. They feel it's a contractual privilege in the policy, and they're able to make these changes without the notification. And where this all stemmed was in September of 2016, Lincoln made this change to any policy issued after September 12th, 2016, and any policy that was in force before April 1st of 2007. So we had changed the blocks before and the blocks after. So Lincoln was just bringing this block back in line with the blocks that are out there. The good news is there's agencies such as yours that are very proactive, realize the value of this to bring it to your agents so your agents can discuss it with their clients. But other than agencies like yours promoting it to their agents, the clients will not be notified. So very, very important for you and your agents to talk to your clients about this change.
Yeah, we appreciate that, John, and we appreciate you helping us be proactive. And Lincoln, again, Lincoln is not alone, right? We have several situations where Kathy and Adam in our office caught a principal policy, a 10-year term. You have 7 years to convert. Applicant is, just 4 years removed from stage 1 throat cancer, right? It's not a mortality issue, but that particular applicant will never qualify for preferred again. Certainly not preferred best. We're looking at standard moving forward. The cost of conversion is less than waiting the remaining 2 years and buying a new 10-year term. So you're owning permanent, and your cost savings is apparent. We have a Corbridge issue, right? 10-year term. You have 8 years to convert to the good stuff. We have John Hancock, where we sold a bunch of Vitality term. You have 4 years to convert to the good stuff. So it's a moving target where you need to be aggressive and you really need to be on your game. And that's a value add that we're providing along with Rick's help and constantly evaluating different technology. And we got in pretty early with Rick, thankfully, and we're able to salvage situations like I'm about to share with you now in a case study. Male 62. I'm just going to share my screen. Bear with me for a second here. So male 62 was preferred at the time of underwriting. He falls into this block. The changes are applicable to him. He was preferred at inception. He's now in watchful waiting prostate. He has not had prostate removed. We feel like if we went to market with him today, we'd be in the table 4 range. Convert to the wealth preserve, you're at 37,000 per 2 million. He's got an $8 million policy, so we're showing it in units of 2 million. Your cumulative spend through age 90 is 1,043,000 versus waiting until this change to take place. Your conversion premium to the conversion UL 69,000. Your cumulative premium through age 90 is 1.6 million. $100,000 difference, and the wealth preserve gives you certainly better, bells and whistles, guarantees, cap rates, flexibility. So if you have a customer, look, conversions are not for everyone. It is a significant investment. The client has to have a need for permanent coverage, have the cash flow to manage permanent coverage. But it is a no-brainer in the sense of in any sense of the term, a no-brainer to pull the trigger today.
Anthony,
So
that's
as we
not
move
a
into,
maybe. Oh, I'm sorry. That's not an isolated case. We had one yesterday, 50-year-old for a male, uninsurable now. To convert to the wealth preserve, 9,621 with a guarantee to 90. To convert to the conversion UL, 21,320 with a guaranteed 86. So you're spot on with this.
yeah. And there's also opportunities, and you may find that you can minimum fund some of the permanent just to kind of lock in that insurability. It doesn't work for every product, every carrier, but universal is flexible, right? By definition. So it's not always you have to overfund or fund for a lifetime. You might would just want to kind of crawl into this if the carrier product will allow it. And that's what Adam and team really studies. Um, so if we kind of get into the secret weapon here with Rick Hyde, it's really difficult to manage this, right, and get your arms around the book. And the insurance industry is very antiquated. We have directions and we will share them at the end of the call on how to access your book of business at companies like Lincoln. But Lincoln has documented it and made it fairly easy for you to do. To go to every single carrier and download your book of business is a complete and total nightmare. And then becoming familiar with all the rules of engagement even compounds to that issue. So, Rick, how does Network Insured Connect, which is your solution that you built and the founder, help advisors identify and engage affected policy owners with your help and with the help of Life Brokerage?
Sure. So, first of all, we have, I think, about 30 life feeds now, and we have, I think, 28 annuity feeds. So the carriers are pushing the in-force data directly to us on a daily basis. So all your data is getting updated on a daily basis. The carrier feeds, as you folks know, are done at the BGA level. So all of the policies written under Life Brokerage, Lincoln sends us a daily feed of all those policies along with all those other carriers. There's 2 applications, Adam. There's the one that Adam and Kathy and your team can access, and they can see all the in-force policies. They can actually log in. They can identify the term conversions within there to support your downline agents. And then, of course, you can provide access to each of your downline agents. They can log in. There's a couple ways they can get access to their term conversions. There's a dashboard where they can say, show me all the active in-force policies for Lincoln. For my term 20 policies written between these 2 policy effective dates, that'll create their list. Or there is another tool in there where we create some insights for them. And I'm happy to show these to you if you want to see it very quickly.
We'd love to see it. And Rick, we talk about monetizing policy owner service, and your solution has really kind of gotten us to that point, right? We're running these filters for you. The vast majority of our producers who engage with us, it's very easy to work with us. You very simply reach out to Lauren Ayers, or if you have a marketer already at Life Brokers that you're currently working with, we will initiate contact with Kathy. She'll establish credentials for you. It's very easy. Once you establish credentials, not just policies originated with Life Brokerage will start to show up in your dashboard, but policies originated with other BGAs who also subscribe to Network Insured Connect will also show in your dashboard. So now you're getting a more comprehensive view of what you've put on the books over the years. Now, not every BGA has a subscription, and if they don't, shame on them. But then you can take it actually a step further and share that book with Kathy and Adam and team, where we can go in and mine and do these searches and filters for you, so that when we catch wind of a change or a company practice that has changed, we will bring them to you on a proactive basis. So, Rick, give us a look on how we can kind of manage and see what our dashboard could look like.
Sure. So I'm logged in as an agent in here. I'm going to click on the left side. I'm going to look at all my life policies. So you'll see here I have 380 policies, and you can change up your views, what data you want to be here, but you've got the policy number, owner, product name, premium information, effective dates, and so on the policy. So your entire book in one place here. You have these filters on the left, Anthony. So you can break down your book. So this advisor is 357 in-force policies, 15 have recently lapsed, 5 are lapsed pending, some are suspended, and so on. They can break down their book by product type. So their ULs, IULs, VULs, whole lives, and so on. They can break it down by carrier. So they can segment their book very easily here. And down here, there's the effective date of the policy. So in the case of Lincoln right now, if you want to identify the conversion options you've just talked about, you say, show me my active. I'm just going to put my term 20 policies written by Lincoln between effective dates, and I forget what dates John mentioned, but like say 2009 and 2017, boom. You have a list of all the policies that potentially qualify for those conversions right there. You highlight those, you can save them as a list and work through the list, or you can, download them to a CSV if you want to work through them in an Excel format. Your data is right there for you. Now, the other thing you can do is you go into our Life Insights tool, and in here you have insights, things like, here are your lapse pending policies and so on. They're right there. You have policies, upcoming premium payments, but here are your opportunities. So under Lincoln, and we've built in the different rules for term conversions, you can see that, this advisor has 13 term 30 conversion opportunities. They're right there. So super simple for you to access your stuff, and that's just one of the dozens of features that are on the platform. I know we have limited time today, but that's obviously a hot topic. But there's many more. Now, for advisors that want to give you guys access, Anthony, they simply go into settings, shared access. They're going to put in Adam's email address, name, and say link, and Adam will get an email from the system, and he can go in and he can support that advisor and help manage their entire book as well.
Great work, Rick. So typically our process is we establish credentials. We book a demo with Kathy in our office, 15-minute Zoom screen share. Book it 3 to 5 business days out, right? Give the system a chance to import all the policies associated with your particular agent information, and then you'll have a better feel on what kind of data you have to work with there. Sharing is optional, right? We don't, we're not mandating that you share with us. We think we can help you monetize that book, and really start to create advisor, priority with client prioritization, right? Lapse pending, obviously, right? Adam's a master at this kind of stuff. Like lapse pending is amazing, right? That's probably the first point of contact you want to make with your customers. Lapses that already occurred, right? You might want to circle the wagon with those particular clients, see if they are still in need of coverage. Different term changes, right? Like Adam is currently filtering John Hancock policies originated in 2021, 2022, right? They're approaching that 4-year conversion mark. filtering Lincoln, right, in this 2007 to 2016 block. So we're helping you prioritize. We just sent out a report to all of our agents that had term policies on the books with 24 months or less remaining, right? Want to get proactive. Can you, Mr. Client, Mr. and Mrs. Client, can you identify anyone on this list who's going to need coverage beyond the next 24 months? And yeah, I mean, agents absolutely love it. We have monetized this. We actually track KPIs on this, how many credentials we set up, how many demos we do, premium that through conversions, rewrites. This is a huge initiative at Life Brokerage, and we want to be your partner on these types of things. So, with the help of carrier partner relationships like John Kimmel and tech, solutions like Rick at Network Insured Connect, we've been able to pull this off, and kind of really proud that we're way out ahead of a lot of most of our competition. I'm just going to go around the horn real quick. I appreciate everyone, being with us. We're going to send out a recording of today, instructions on how to register for Network Insured Connect, who to reach out to if you'd like credentials, and Kathy's calendar if you'd like to demo a solution with Network Insured Connect for a quick 10 to 15 minutes on how it works, and potentially even see what comes into your dashboard. But before I do that, I'm just going to go around the horn for any parting thoughts. Adam, what advice would you give to an advisor today to address this term shakeup and really help them manage their client's book?
I just think you just want to create awareness for yourself and for your clients. So just to be able to get this book of business from Rick, if you can't replace the policy, if it's not a conversion, you could put notifications, you could put things in your CRM or in the system to notify you of when it might be a better time. So if it's a 10-year term and it's 6 years in, you might want to start to think about 3 years from now. You now have a system to complement your own CRM, or can be a variation of a CRM for you that can automate that. So that, 1, 2, 3, 4 years from now, you're just going to wake up to notifications of conversations that are important. And I would do it for every single policy. I do it for every single policy that I'm responsible for. And a lot of our agents get this. I'll tell them, hey, you got 1 year left to convert to the good one, 6 months, 3 months. We really just want to create awareness for this, because the person's losing the right or possibly losing their insurance. And, you don't want to wait till 2 days beforehand and then be in a bad situation, because then you have to either underwrite or drop the coverage. It gets pretty tough then. So we want to get ahead of it.
Yeah, you're managing not only the liabilities on the books, but you also can go on the offensive and really help clients long term. John, any closing thoughts or advice?
Yeah, obviously, great call. I would, if I were an agent, I would reach out to all my customers that have the term policies, but I would prioritize any of those that are clients, friends that have these policies that their health has changed for the worse. Those would be probably the first ones I would reach out to. And price is always an issue with clients. Some of them might not be able to afford the full term conversion. Remember, you can do partial term conversions as well. You don't have to convert the whole face amount, as long as you stay above the minimum life elements, 250,000, or term excel 100,000. You can do partial conversion.
Yeah, great point, John. And we built a nice little spreadsheet to show partial conversions, and right, you're essentially hedging your insurability if you're still healthy, right? You want to lock in as much as you possibly can. You want to hedge 20%, 30%, 50% of the existing term. Here's what it looks like. Rick, you've been doing this, several times over. What advice do you give to agents who are kind of affected by this?
I think, the in-force book is a gold mine. We've got case study after case study after case study where there's, client engagement opportunities, upsell, cross-sell, annuity cross-sell, conversions, you name it. And, the tools are there now to manage this information, to enact this stuff. So I follow up, kind of take what Adam says a little bit to the next step and said, you've got the technology now. You can manage your book effectively. You can be on top of these. You can have notifications set for all of these events that are taking place. You got to do a bit of work up front. But man, once it's there, the value of your book, Anthony, like it skyrockets, because
Sure does.
it's you got to take advantage of it.
Yeah, well said. Gentlemen, you did an amazing job. extremely informative. As I promised the attendees, copy of the recording and copy of the link and memo, instructions on how to register, email address on who to contact, and a calendar link to jump on a calendar with Kathy and demo the system. We'll give you plenty of tools, plenty of access points to work with us and the system. Again, on our dime, we're purchasing bulk subscription from Rick and providing this as a differentiator to our producers. So I want to thank you for joining, gentlemen. It's been my pleasure. I wish everyone a happy, healthy remainder of the week, and our meeting is now adjourned.